Hi, and welcome to the Ideaspring Capital podcast. Today we have Naganand Doraswamy, Managing Director and founder of Ideaspring Capital, in conversation with Sharma, who is an angel investor, a passionate evangelist of the software product ecosystem in India, and co-founder of the iSPIRT Foundation. He has held a number of senior executive positions with leading technology companies. Most recently, he was a senior vice president at Yahoo and CEO of their India R&D. In this episode, they discuss why startups should think global from day one, the challenges of building products for global scale from India, the challenge of rediscovering product market fit, utilizing India as a test market and a place to get traction to reach critical mass, the possibility of solving the middleware problem from India, product B2B2C trends in India, and a whole lot more.
So Sharad, welcome to Ideaspring podcast series, and it's awesome to have you. We have known each other for a very, very long time, and you have, most importantly, you have seen the Indian product ecosystem evolve, right? From the time I have come back to India in 2005, I have seen you spearheading that entire effort. So in this podcast, would really love to get your views on where we are evolving as a product nation, as you have the name you have concocted in iSPIRT as well, and focus more on the enterprise area. And that's where Ideaspring also comes into play, because we understand that space very well. So first off, I wanted to get your thought on where, as a snapshot, if you were to take the snapshot today, where do we stand as a product nation in the enterprise context?
I think we are halfway there, and therefore the question to ask is, what got us here? Will it get us to the second half? And I think we have to keep doing what we were doing, but we have to also change gears, and so we got to do some things which we were not doing as we move forward. So I think this is another 10-15 year journey that we have to go through, and then we can legitimately say that in B2B products we are a meaningful player in the world.
So when you say that, I'm saying we have crossed like 12-13 years now, and you have 15 years more to go. If you look at what Ideaspring is doing today, we are betting on the fact that India has the capability to build products not only for the Indian market, for global scale as well. And as we see, the market for India also is now opening up. Unlike before, where there's no market, now there are enterprises buying. So either it's like you were saying before, B2B or B2B2C, depending on the classification, we are kind of getting there. Now, when you look at these, right, one is building products for global scale and one is building products for India. I mean, let's just consider those two separately and first focus on building products for global scale, because, that's where most of the companies have evolved in India. And then we'll get to the building for local market next. What do you feel are still some of the key challenges that we are facing, in building products for global? Because I think as you said, we are started a journey, but some of the key things that you feel that we still are lacking, we need to focus on, we need to build, that ecosystem players can now contribute.
So I think there is a saying that great products are built in shadow of sophisticated customers. So when you're building for the global, you need access. You need, if not physical, you need proximity to those sophisticated customers. And that is very hard. That problem hasn't gone away. Even if you are addressing the mid-market segment of the B2B market, which is where, let's say, Zoho plays or Freshworks plays and, Orangescape and others play, being able to access the most sophisticated customers and build for them so that, your product is truly, truly world-class is hard to do. It's not easy, right? And that is the part that remains relatively inaccessible. And now to get to that point, you either need a team which had prior knowledge of that domain, prior relationships, and so on and so forth. And, that's one way to make it happen. Or you have to develop that. Now, to develop that, you must have achieved something to be able to summon up talent and capital, to be able to get the right to develop that. And that usually means using India as a test market and creating some success. And so that is what it takes. Now, very often when you create India as a test market and you do taste success, then many people lose their way. They forget that India is only a test market.
Okay.
And they get too caught up in kind of worrying about the test market. So there are these common pitfalls The good news is that these common pitfalls are much better understood. And I think in some ways you can say this was done by iFlex back in the early days for BFSI. In the more tech-oriented space, this was done by Dhruva. And thanks to people involved in both of these companies, N.R.K. Raman in the case of iFlex and Jaspreet and Milind in the case of Dhruva, they've been very open in sharing these learnings, and therefore they have become generally available. And so by the time, let's say, Freshworks or Freshdesk came around 7 or 8 years ago, this had become relatively common knowledge. And now the happy news is that the success of Freshworks and so many others, that brand of, or that generation of entrepreneurs have also given back in a big way, right? And particularly what they have given back to the ecosystem is desk marketing and selling. And India is definitely becoming a sophisticated player in something like that. So it's a evolutionary kind of a phenomena, and there is a lot of learning, tacit knowledge.
So basically, the maturity is slowly creeping into the system.
Yes.
Like, irrespective of what we say, startups do require maturity. I mean, startups and maturity don't go well together, but the ecosystem maturity is an important thing, is what you're saying. And if you look at what Ideaspring also does, and you're also intimately familiar with what we do, see, most of our bets, hence, we take on people who have had experience in that domain, right? And there are theses that say that sometimes, revolutionary products come by people who are not in that domain. And unfortunately, in our case, in case of funding startups in India, the revolutionary thing will require a customer, and we don't have it. So I think even today, we are still hence required to kind of stay on the tracks to say fund entrepreneurs who have some experience, so that when you build the products, you can use the context you have in the US or otherwhere in the world, and then bring something relevant to the market, as opposed to doing something completely new. So is that a right approach to take in the short term till the market develops, you think?
Yeah, absolutely. Yeah. I think especially in B2B market, lot of the purchase decisions are mostly rational decisions. And, in the B2C market, in some sense, it is harder to crack that market because, the decision-making on part of the customer or the consumer is more tacit or more difficult to understand. And emotion very often plays a role, right? And sometimes those elements of emotion, social context, social pressure, brand are better understood by people in that age group, who are very fresh. And in that segment, experience or age, let me say this, can become a problem.
Yeah, disadvantage.
Right? This can be a disadvantage. Yeah. But in the business segment, usually, there's a similar age group person, with 10, 15, 20 years of experience taking a decision, who's also cynical, but also it is not an impulse purchase. And it's a high consideration purchase. So you can understand the mind of the customer and then organize yourself to beat the purchase process.
And one thing we are also noticing, I would like to get your inputs on what you're seeing in the market, since you're out there a lot, is the fact that India, you can also, in addition to being a test market, in our portfolio companies, we are starting to see that you can also get initial market traction. It's not only test, but you can also get market traction. And then hence there is some critical mass that is built for you to raise money to go to the US. Because one of the issues that we have is, as soon as you say you have to go to another market, right, whether it's US or other Western countries or even Southeast Asian market, you need to have a lot more money. And to get more money, more funding, you need to show revenue. And what thankfully we are seeing now is that you can show revenue traction in India, so that you can get somebody attracted and go to the US market. But even if you raise money, the challenges still exist, to your point, when you go from the Indian market to the US market. Because if you have not thought global from day one, when you go to the US market, you will be, in fact, surprised about the market or the culture or whatever it is. So what have you seen work in some of the companies you mentioned, Dhruva or other people who have successfully transitioned from getting traction, not necessarily test, but traction in the market, and then still succeed in other markets?
Yeah, the challenge in going to the US market is to rediscover the product market fit. To rediscover the product market fit, even when you've already found a product market fit back in India, requires you to actually have a high degree of humility, right? Because, the world is trying to tell you have found the product market fit. A small variation of this should work in the US. And success comes to those who actually jettison that thinking and say, let me almost start from first principles to rediscover the product market fit. And the reason is because the maturity of the customer is different. The basket of competitors or competitive options they will be looking at is different. The degree of inertia to move forward is very, very different. The appetite to embrace be an early adopter and embrace something that is unproven is very different. So you almost have to recraft the product market fit in the US. And that requires humility and unlearning. And anybody who can bring that to the table can therefore recreate success. But very often doing both, which is one, trying to scale in India and at the same time developing a version 1.0 product in the US, is very hard for a small company to do. And therefore, I at least am of the opinion that India is truly a test market. When you figure out the test market, all that you have done is put your arm around technology, stabilize that, have low tech debt, but actually stop selling in India.
You would say stop selling.
Stop selling in India and redirect everything that you have to taking the leap to the US. And if you fail as a company, that's okay. But your odds of success actually go up because you have put all the quivers, behind that single goal.
All or nothing at that time.
All or nothing at that time. And that is very hard to do. Usually the entrepreneurs are willing to do this, but there are very few investors like yours who are willing to see the company do that. Because the investor says, let's have a fallback option. And that fallback option actually erodes the ability of the company.
It's a new thing for me as well, because as you say, as an investor, I'm an investor. And suddenly to see the bottom line of how 50% or 70% of the bottom line erode is a hard call. But to your point, if you take that safety net out, then you have to make sure that you are succeeding in the market that you want to succeed in. Because in these cases, when you're building for global scale, there's no comparison in the market that you can get somewhere else as opposed to India.
Yeah, and although this is not so unusual, this particular form of taking a leap into the next innings is new. But the idea of taking a leap into the next innings when you're doing well, where betting the whole company is actually not new. Netflix wouldn't be Netflix had they not taken the leap from the ground to the cloud when they were actually doing well with DVDs.
Very true.
Right?
They had to completely transform their business.
They had to,
model.
and their board resisted. Their investors resisted. The entrepreneur wanted to do this, but the board was not supportive at that. But thankfully, the investor, the entrepreneurs still went ahead and did it. And you can now look back and say they won't have been as valuable a company.
Absolutely.
On the other hand, sometimes
because there are others who went out of business who were just doing DVD business.
Take our local success story, Deep Kalra. Deep Kalra, he is in his third innings of the company. Now, it is true that second and third innings coexist, which is selling airline ticket and selling, vacation packages. But when he moved from the first innings, which was all international, US travel, to domestic travel, he actually stopped worrying about the US travel. He made the same kind of a shift and he bet the company entirely on domestic travel. So the concept is not unusual. And inevitably, we know the investors are the ones who prevent this kind of bet the company phenomena to happen. In this case, for enterprise B2B, this form of betting the company is somewhat unique to India, right? Because you don't need to do this in the US, obviously.
True. Very true. So, but yeah, I know I also take your point as a personal learning in this conversation because it's applicable to me as an investor. But in your mind, if you look at global product startups building products for global scale, transformation from where we were in 2006, 2007 to where we are in terms of entrepreneurs' maturity. What have you seen as an evolution? I know you still said you have 10 more years to go, but 50%, is it good, bad?
I think it is generally headed in the right direction. So there are two major shifts that have happened, which have worked in India's favor. And I think India has taken advantage of both the shifts. First, is that the small teams can build complex products, right? And that is possible because of the cloud, and it is also possible because of open source. So because of these things, you can do combinatorial innovation. You don't have to worry about data centers and stuff like that. And that kind of allows small teams to build, very meaningful, complex enterprise products. The second is that the cloud opened the mid-market in the US. And now the market that would not have been available if there was an on-premise solution, but is available because you have a SaaS solution, is very, very large. And that market is all of 10 years old. And so therefore, your best competitors are maybe 3-4 years head start. It's not as if they have 13 years head start, right? So the market is actually a virgin market today. And India, for the first time, is not late to that market. So you can see companies being able to take advantage of it. And Zoho is a very good example of this, right? I mean, they serve 40 million people, right? I mean,
Astounding
use Zoho,
figure,
astounding figure. Why? Because they were there when the market opened up. And so I think we are by and large not late to the party. And small teams can do big things. Both of these things have been a big blessing for the Indian product industry.
But why is that we are still seeing LPs resisting investing in funds that are in India that look at global product? Is that fear still exists that you'll not be able to do it, or we have more to prove? What do you think is happening in their minds? What are they looking for?
Yeah, so I think one of the things that is going on is that SaaS is no longer sexy, even in the Valley.
Right, correct. I've heard that. In my recent Valley trip, they said SaaS, no, you'll stay away from it. Yeah.
Right. It's not sexy anymore because newer things have come in. So when you go and say we'll build a valuable SaaS company out of India, they say, boy, I mean, I'm not even investing it locally. Why should I invest in it? So this is not to do about India. This is that this whole sector is generally not that sexy. Where things are sexy is, can you build middleware for blockchain? Can you build middleware for let's say AI and machine learning, right? Because let's take blockchain as an example, right? There are distributed apps. Then there is a layer of let's say middleware, all kinds of middleware, and then there is base infrastructure. There is no clarity today where the value capture will take place. Would they be thin apps from a value perspective and fat middleware? Or will it be thin middleware and fat apps? Because if you go back and look at the PC industry, the only people who made money were Intel, the middleware players. And the Compaqs and the Dells, and they made very little money in relative terms. But if you go back and look at the internet, it is the Googles and the Facebooks, the apps, who have ended up making all the money. And the people who have been behind that in the middleware have made very little money.
And the core telco infrastructure, so they don't make any money.
Exactly. So what is unclear is that as you look at the new stacks that are coming, and clearly blockchain is one of them, AI has a role to play, it is unclear where the value capture will be. So the sophisticated investors in the Valley are really wrestling with those kind of issues. So when somebody goes in and says, I am going to build a SaaS which is going to let all spas operate with an ERP solution that they could not have done on an on-premise basis, it is interesting but not exciting for them. And so therefore, that is the reason why you are not seeing interest come in from that.
Coming back to your comment on this middleware and infrastructure, one of the issues or the problems we see as a venture capitalist is like, when you do that, you have to be, like you said, be closer to the customer, and that market is not in India. So even if you were to say develop the middleware, to get some traction, India cannot be even a test market in those cases, mostly. You really need customers who can integrate, developers who can integrate that, and that market typically is outside, right? So even if you were to support the startups, one of the issues we are seeing is the fact that where are you going to get the next round to go to the US market? So hence, either the funding has to be good enough that you have the ability to go there, or get somebody from the US early on as your partner, right? So that is, both are a little bit of challenge, right? So how do you solve that problem today, for us to work on those kinds of areas?
I would point to your own portfolio company in voice middleware, where you are making a bet in voice middleware. Are you not?
No, yes.
I don't know whether that's been announced, but you have made a bet in voice middleware company.
Yeah.
Look, in machine learning, Julia is a success story out of India. Let's say Browser Stack is essentially a test middleware company. That is a success story here. The original Dhruva was about middleware for continuous data replication. And that is definitely Dhruva, of course, morphed itself, evolved itself as it should have. But it started off in that formulation. So I think that is happening out of India. And in fact, I would submit to you that the most valuable companies that India is producing come with that DNA or background. Because you see, if you are making just an ERP for any set of buyers, right? it can be a valuable company, but it cannot be truly a industry shaping, a category breaking.
It won't be an
kind of a lead.
influencer, so as to say.
Yes. So it is a good thing to do, and from an entrepreneur perspective, is a worthy thing to go. From an investor perspective, is a worthy thing to go. But you're looking at smaller exits. On the other hand, if you can get your hands around a problem that requires a middleware solution, it is a more unforgiving part of the market because there are no also-rans there. Right? Either you're a winner or number two, there's no value for a number three. But if you can be in that category, and India has produced some of them, and therefore it becomes a worthy thing to do. So I am not as pessimistic as you are about the middleware players. I'm actually more optimistic. I feel that the very large pool of R&D footprint, MNC R&D footprint that we enjoy in India, which is very antsy again, is not happy where they are. Okay. And therefore, there are lots of budding entrepreneurs there. Many of them will actually come and focus on middleware plays rather than end application plays.
And that's our whole bet, as you know, when we started Ideaspring is to capture that audience.
Sure.
Now, hence shifting gears a little bit, now that you brought up the middleware investment that we have made in the voice, the reason why we got excited and where we believe that we can have a large impact, it is the first time where we did a B2 small b, like you're saying, or B2B2C in the Indian market. And that platform, we believe, will address like 500 million, 600 million people, right? Because you'll sell it to enterprises, but who in turn are looking at customers at their end users of that particular platform. And those kinds of plays we are very, very excited about. And then many more are coming along the way, and you have been spearheading that movement of India Stack and Health Stack and other things. So switching gears onto the B2 small b or the B2B2C market in India, I see a lot of opportunities opening up. Now, so thinking about enterprises, there's no reason for us to think global anymore, right? There is a lot of opportunities in India. So switching gears into that, next 3 to 5 years, what do you see are some of the trends that you believe VCs and entrepreneurs should latch onto? And also people coming from outside wanting to invest in India as LPs, how should they look at this product innovation in India?
So if you go back and look at the last 30 months, it has created two very valuable companies, both related to payments. So, not far from here in Koramangala, you have PhonePe, which by any yardstick is a valuable company, probably worth $1.5 billion in the same time frame. And literally a stone's throw from where we are, so that people can even actually see where, sense where we are, is JustPay, right? Which has become a very valuable company on the back-end infrastructure that banks need to be able to deal with the new payment system. Now, so clearly, the financial sector in India is going to create lots of B2B and frankly B2B2C, B2B, B2C players. Why is that the case? Because India now has a story which says that we will see financial inclusion happen, very rapidly in the next few years. So what's an example of that, right? It's for the listeners who are in India, they can probably relate to this example. Many of the listeners may have been living, if they were born, in fact, many of our listeners may not have been born in 1987, but their parents then may have been living in a town which didn't have a Doordarshan tower. So therefore, they didn't have television, because only 34 cities had Doordarshan towers in 1987. So most of the India actually didn't have TV. But in 1988, when PAMSAT and INSAT became available, of course, everything changed. And in 7 years, the TV watching audience in India grew 25 times of what it was in 1987. Right? So it was just the creation of new infrastructure that unleashed a set of changes that are happening. Now, obviously, this is taking place with Jio, with UPI. Who could have thought in 27 months UPI's transaction volume in India would be more than the global transaction volume of American Express, which has a 60-year heritage. And MasterCard worldwide is less than 10x of UPI volume. Now, if UPI has a bad year, it will grow 3x next year. If it has a decent year, it will grow 6x. But it's not out of realm that it will grow 10x. So this kind of change, of course, requires working of the infrastructure in the entire financial ecosystem. And nobody now wants to do it the custom way. People want to do it by building and plonking either middleware or new applications and platforms. These are all product solutions that are going in. None of them are going in for a custom project-based kind of a solution.
Scalability becomes a key there.
So therefore, the market is very significant, and you can see that is actually beginning to attract investment. It's attracting high-quality entrepreneurs, and I think that is not going to change in the foreseeable future. The second area is health. That is a little further out. Why is health going to go through an inflection? Is because similarly, what India Stack did to financial inclusion, Health Stack is doing that to health inclusion. And it's a newer thing. It's, therefore further out, but it is going to reshape the health sector in India. Go even further out, right? I mean, there is this sense about, since our e-commerce is owned by foreign e-commerce players, India has a danger of having our logistics owned by foreign players. To cope with that danger, like UPI is the rails for payments, there is a logistics rail being created. And as that happens, as a public platform, the first version of that is already out, and it is to do with drones. That's called the Digital Sky Policy. And now, many people are here participating in that. So these are all, now drones is not a consumer play in India. It's an entirely B2B play, right? And because the use cases in the beginning are agricultural protected income, mining, organ transplants and stuff like that.
Mining also, I've heard.
Exactly. So therefore, there are large opportunity sets where non-linear growth is expected in the future that are opening up. The problem that we have, which I think is the reason I'm here, because the admiration that I have for the team that you have set up is that you are able to push the entrepreneurs to actually bet on the technology trends, not contemporary technology, but what it will be 2 years from now. Otherwise, what many of our other investors are doing, they push them and say, hey, this is risky, this is a bet, I don't fully understand it, why don't you take the safe option? And when they do that, they get a Meru and not an Uber. Right? So we have a history of creating Merus and not Ubers from a B2B perspective, because we didn't have the gumption to actually make a bet on the technology trend. And what your team is able to do, because you've built it so thoughtfully, is that it pushes the entrepreneur to actually rethink its decision. And very often that is going to be the difference between success and failure. So India market is going to be tough, but nevertheless there is a large market.
That's a huge market. And to your point of pushing the envelope in terms of betting on product innovation, I still believe tech innovation, we are still behind, and the ecosystem, whether it's academic institutions, R&D labs, that has to pick up in India. But I'm very confident about product innovation, taking lead in the product innovation, trying new things that are coming 1 or 2 years down the road, be ahead of the others, right? But other thing I think we should also look at in building the ecosystem, I kind of tell many people, is the next round of investment also has to go through change, because seed investors can take certain amount of bet, but to really push these guys to the next level, you also need a set of guys coming and taking similar, better risks, let me put it that way, on product innovation.
Agreed. But I want to build on the point that you're raising. So I'll tell a story, right? In 1955, it was clear to AT&T that transistor was a seminal innovation. They owned, AT&T Bell Labs owned all the patents related to that. And since they said it is a seminal innovation, they said, as a contribution to society, we will let an American company monetize it, commercialize it, without us asserting our patents. So if you're a Canadian entrepreneur, you were a German entrepreneur, French or British entrepreneur, you didn't have the benefit. In fact, one of the Bell Labs person, William Shockley, who's considered to be one of the two fathers of Silicon Valley, decided to say, boy, this is wonderful. I must go ahead and do this. And, and he moved west to do this. And of course, he was a brilliant man. And at the same time, as some people say, he was the world's worst manager. So 64 or 65 companies emerged from that. People would join, they couldn't bear to work with him, and they would go back. And of course, the most famous company that emerged out of those 64, 65 is Intel. And that is why Silicon Valley is called Silicon Valley today. But the point I'm making is that the reason in 1960 Japan did not make cameras, and today you cannot find a DSLR camera that is not Japanese, is because Japan invested in research with public money, and then instead of giving it to everybody equitably, which is what is the official position, the reality was that it was actually available on a preferential basis to its local companies. So those are the local companies that commercialized it. So today all optoelectronics is controlled by Japanese companies. Even the copiers of Xerox copiers have Japanese optoelectronics. All the space thing that we hear is mostly Japanese optoelectronics. So the point I'm making is there is a jugalbandi between some public assets and private innovation, which you call as product innovation. In the West, that jugalbandi was research, science research, funded by DARPA, funded by NSF, funded by universities, that would provide the substrate on which private innovation would happen. So therefore, it's fair to say that if there was no DARPA, there would be no Cisco. There was no Stanford research, there'll be no Google, right? No GPS, no Uber, and so on and so forth. So the question is, what is available to an Indian company? Because they'll only be second-class citizens for that stuff that is available to only an American company. That has turned out to be the Indian public platforms. But the shame of this is that since the Silicon Valley entrepreneurs understand the power of public assets on which to do innovation, our Indian public platforms are being exploited better by foreign companies than are being exploited by Indian companies, Indian entrepreneurs. And the reason for this is that we don't understand that really the Silicon Valley success story is a jugalbandi.
Correct. The ecosystem has played
so no amount of product innovation in vacuum is going to matter if you don't have a substrate that you can connect to. The reason Israel is successful, because Israeli companies are considered to be natural users of that substrate that is created in the US. Indian companies will never be treated like that. So we have to sell this idea that this jugalbandi is important, and that is not yet settled into the ecosystem as well as it
But I'm sure with all
time
effort,
it will,
time
because,
it will.
another year or 2 or 3, things will change.
It'll definitely change.
Yeah.
No. So so your closing comments on your thought on the next 5 years, because you are kind of seen this and helped the ecosystem so significantly. What is your optimism in the next 5 years for enterprise product innovation / products in India?
Yeah, I feel that, there are some kind of crazy statements that some of us have made, and I feel more confident that they will come true. One of them is that we will be to mid-market SaaS what Israel is to cybersecurity. I think, one can double down on that. It's been the third year that we are saying this. So that is fair to say. I think it is also fair to say that in some areas, particularly, we can say with confidence that when it comes to financial services, Indian companies will be financial inclusion. Indian companies will be significant players at every part of the stack. And therefore, the other stupid thing, in a way, one could have been saying, but I don't think is stupid, is something that we've been saying, in Startup Bridge India, which is done in collaboration with Stanford University, in the Valley, saying that Valley will innovate for the first billion. India will innovate for the next 6 billion. Together we'll innovate for the world. I think that is more true today than it was a year or two ago, because people can see that coming to life in financial inclusion. And I think if we can replicate that in some of the other areas that we're talking about, then we would have a good story to tell. But as I said, what got us here is doing just more of that is not going to get us to where we want. And so therefore we don't have time to cover much of that, but we have to be very thoughtful in figuring out, therefore, what different.
So at Ideaspring Capital, that's what we, as you said, that's what we are trying to do to influence entrepreneurs to kind of take this bold step and most importantly be there for them and help them in that journey. So Sharad, never a dull moment and talking to you and awesome to talk to you and then a lot of good ideas, and I'm sure the listeners will appreciate what you have said and I'm sure you'll inspire a few people now to kind of take the path of building for India and using the platforms that we spoke about to innovate for India, and we should see more of that coming out in the next 2 to 3 years. Thanks a lot. Thanks for your time.
Thank you for listening to the Ideaspring Capital podcast. If you like this episode, please subscribe to the show and do leave us a review and rating on iTunes, Stitcher, or the app that you're listening to this on. Additionally, you can get in touch with us on Twitter at IdeaSpringCap. That is IdeaSpringCap. This podcast was produced by Scapari, your complete digital marketing agency.